Stop buying good deals. Cancellations are spiking, and let's talk about some great data that came from ResiClub here in the last 48 hours or so. Folks, this is your daily financial news for Wednesday. I have actually no idea what day it is, so we'll just say Wednesday. Let's talk about a conversation I had with one of our millionaire guests. Yesterday, Omar Alfaro and I talked about his market, talked about what he's doing in his business. And there were two things I encourage you. Go to Omar's playlist on this channel or watch the videos from yesterday. I think they came out at 3 p.m. and 7 p.m. They are very important. One, we talked about his market. His market of the high desert is important because it is what happens first, at least in the California market. And he highlighted that over the span of the last couple of weeks, they have seen cancellations spiking. I suspect we are seeing cancellations spiking across the country. If you are in the real estate business, do me a favor, leave a comment below. Have you seen cancellations spike in the last, let's call it 30 days? Now, as we had that conversation, I want to let you know it's completely normal. It should be expected. Let me remind you of what I think is happening. Right now, we are operating in a world where there are lots of home buyers who have been trying to buy a home, and unfortunately, they have been getting outbid. They continue to shop. They now get in contract. They are happy. They are ecstatic to get in contract. And then they do the math with 8% mortgage rates. Then they look at the payment, and even if the bank says they will approve it, they feel apprehensive. They should. This is crazy what is going on now. So again, they will cancel the contract. So do me a favor. If you're in the real estate business, let me know if you've seen increase in cancellations, meaning it goes in escrow and it comes out. If you're watching your buy box, are you seeing more listings come off the market and go on? Completely normal for where we are. The winter, I've said this for 6 or 8 weeks now, this is going to be the slowest period we've experienced in decades. Rates matter, affordability matters, but that's just the demand side. As you will see in the conversation with Omar, if you go back and listen to it, there is also a supply issue. There are people listing their homes still with what I will call wish pricing. Or they are listing their homes not realizing what their payment will be if they have to buy something. The entire supply-demand picture is in the most state of flux that I have ever seen. So that's what I think. Let me know. Again, watch Omar's conversation. That was video 1. Video 2, important. I shook Omar yesterday. Because something I brought to you 6 weeks ago was we are no longer doing good deals. Stop buying good deals. Omar and I went through an example of one of the deals he's looking at now that is frankly, it might have been okay in 2020 or 2021, but given we are in the winter, given that this property would be brought to market around Christmas, it's not the time to do that. Don't buy good deals. Now again, hear me. I am not saying don't buy great deals. I am not ever saying stop doing the work. I am just saying hold yourself more accountable, write better offers, negotiate terms, structure mortgages so it helps you. At the end of the day, I'm not saying stop. I am saying do better. We will revisit this together on February 1st. Between now and January 31st, we are only doing great deals. We don't know where rates are going. We don't know where the economy is going. It is wild out there. Only great deals. And if you want to see us break this down and really have those aha moments, watch those 2 interviews yesterday with Omar. Omar, if you watch this, thank you for being just willing to have that conversation yesterday. I thought it was pretty awesome. Why don't we talk about ResiClub? Yes, folks, Lance Lambert a Thursday featured guest and a presenter at our Las Vegas event in February, has put out a lot of great data at ResiClub. I can't believe he gives away that amount of stuff for free. Go to ResiClubAnalytics.com. All he wants is your email, and you will get daily, or at least 5 days a week, you will get updates. Just in the last 48 hours, ResiClub has put out tremendous charts and data about the bifurcated housing market. Here is an example. On the low end, Austin is down 10%. Hartford, Connecticut, up 11.1%. And there's a huge chasm and charts highlighting different markets. Understand the market. Understand the buy box. Also, I can't believe this, but Lance has gone out and done almost the impossible. You and I have talked for about a year, maybe even a year and a half, about the broken housing market, above the median, below the median. Nobody talks about this. Lance Lambert, ResiClub, has the data and is creating charts. For example, the lower tier in Seattle, down 5%. The upper tier in Seattle, down 12%. This is exactly what we're talking about. The luxury market is stacking up. You want to get a sweetheart deal? You want to write a disrespectful offer? Go to Seattle, buy one of those crazy expensive homes. You could get some significant discounts. How about on the other side? Virginia Beach. The low end in Virginia Beach is up 6%. The high end of Virginia Beach is only up 3%. And then finally, we'll close on Milwaukee. Milwaukee is up 0.3% on the low end, but actually 0.8% on the high end. Why is that? I suspect, I know nothing about it other than the charts that Lance gave me. I'm going to guess that Milwaukee's high-end market is lower than the surrounding area, and maybe you have some migration, right? Maybe you have people coming from Chicago or wherever going there and taking, like California folks leaving and going somewhere else it's cheap. Maybe you're seeing some of that in Milwaukee. But at the end of the day, ResiClubAnalytics.com is the spot to be. The data that he gives you for free, the articles. If you are in the game of real estate, even if you're just a homeowner, you need to go there and get the information that he brings to bear. How about Roblex? I don't know if you heard about Roblex, but Roblex issued an ultimatum. Come back to the office 3 days a week or get a severance package. Yes, folks, get a severance package. I think there's a lot of folks or a lot of leaders who especially run software companies, which was my background. There's just something about being in the office that moves the thing forward faster. As opposed to everyone being kind of remote by themselves. It makes perfect sense to me that an engineering-focused organization is saying, get your butt back to the office or get out. What else is going on? Mortgage demand down to 1995 levels. Folks, 1995. That is actually before I bought my first home. We are down 6% week on week. These are purchase applications. Down 21% year on year. One concerning factor is ARMs, adjustable rate mortgages, now are up to 9.3%. I think this is one of those little issues with the debt, with the pool getting smaller. But yeah, the fact is that people are doing ARMs on a percentage basis more and more. I'm not sure it's on a total cumulative number, but again, ARMs are something that I am generally apprehensive of. I think they are riskier than they are perceived. And again, if you have to do an ARM to make the numbers work, the deal's not there. Buy a better deal, in my opinion. We did get Procter & Gamble's earnings today, beat top line, beat bottom line, but again, volume fell. So again, they are beating numbers because they have been raising prices. Volume has fallen at Procter & Gamble for 6 quarters in a row. That would be a trend, folks. That is not good. Mohamed El-Arian is finally saying out loud something that I have believed for quite a while. And he is far better experienced at this. And I am clueless on this topic, but it has felt odd to me. That is that the Treasury bond market is headed for an unknown destination. In this article and interview that I saw Mohammed El-Alarian have, he's basically saying it feels like the treasury market, the bond market, is becoming unanchored. Now, is it because we have a mass debt we're recycling? Is it because of global fears? Is it because of something else? We don't know. But it does feel like the long end of the curve ripping higher may be a sign that the bond market is heading towards an unknown destination. Is this the bond vigilantes pushing and testing Jerome Powell? Are they going to take rates so high on the 10-year and 30-year that causes the Fed to do something? I don't know. Excuse me. Housing starts came out today. Again, remember, we have a big number tomorrow, pending home sales. But we got housing starts today. They disappointed. Housing starts came in at 1.358. Expectations were 1.37. They missed by a little bit. Completions were up 5.3%, meaning more products coming to market. The multifamily area, so 5 units and above, up 17%, and completions were up 10%. What does this all mean? Well, I think we're headed to what we've been talking about. Builders are going to finish what they started. Hence, completions were up 5%. They will finish what they started. And really, the small and mid-term builders are going to stop. They're going to stop, which will impact inventory and, frankly, the GDP and the economy in Q1 and Q2. Again, builders will finish what they have and not start new ones. I think that's exactly what these numbers show. And the longer rates are above 8% or close to 8% or 9% or wherever they're going, builders are going to stop. It's just where we are in this cycle. Folks, if you are part of my boot camp, I've got great news for you. Dion is going to come back and talk to us for 2 hours about being the lazy landlord. Folks, if you don't know Dion's story, he reached financial independence with 16 units. The gentleman has 16 units. He spends somewhere between 2 and 4 hours managing his units. And he is living a lifestyle that all of us would dream at. You don't need hundreds of units. You can get there with a handful of units. So Dion is going to come talk to you on October 28th from 8 to 10 a.m. I will send a Zoom invite out later today. And we will get the one and only Matt the Lumberjack Landlord on hopefully the week after. We're still confirming dates and time to talk to you about, oh blank, you're a landlord. What do you do when you get your first unit? How do you run a shop? How do you do the self-management? How do you do all those things? So again, we are teeing up 2 more sessions. Again, we did Jason Pritchard last week. We have Derek, that ADU guy, this week. We will have Dion on the 28th, and hopefully the Lumberjack either on November 4th or November 5th. We again are getting details done. So again, we are bringing you value, value, value. Again, these are all 8 to 10 a.m. Hope you enjoy that. So any last thoughts? I guess last thoughts. Larry Fink from BlackRock is out saying long-term investors should be plowing 80% of their cash in or their portfolio into stocks. Larry Fink believes that the next 10 to 20 years, we will be in a better place. So invest now. Now, obviously, Larry Fink at BlackRock is talking his own book a little bit. I could tell you right now, having a pile of cash at 5% feels pretty good. I like to buy stuff where the seller is motivated. So I'm not sure I'm going to be plowing my stack into stocks anytime soon, Mr. Fink, but thank you for your opinion. I appreciate you. Last thoughts, boom, boom, boom. Nope, there we go. Folks, have a wonderful day. Like, subscribe, comment, become part of the channel. Remember, you can still go to the Best of ORAT and watch Day 4 Boot Camp with Jason Pritchard. If you haven't seen it, you're missing out. We also have the Daily Financial News Show, which will take this video, chop it up, add some fancy clips to it that we'll post later tonight, folks. Have an amazing day. Don't forget, you got to come to the event in Las Vegas, February 17th, 18th. I think we have 100 tickets still left. You're going to want to be around all of the speakers and millionaires, and most importantly, the other 250 to 300 people in the audience. You will find new friends. Your network will get better. I hope to see you there. Later.